Alright, so I did just want to make a quick 2-minute update on Bitcoin, talking about a bearish indicator that I do see playing out on the charts right now, and that is hidden bearish divergence. The reason this video is only going to be 2 minutes long compared to my normal videos is because this morning we made a 29-minute update talking about Bitcoin primed for capitulation. We talked about Bitcoin against the stock market, the dollar, short time frames, longer time frames, price targets, oscillators, momentum indicators, and risk indicators all in one video. So everything you need to know is over there. Yesterday we spent about 20 minutes talking about the on-chain metrics on Bitcoin and Ethereum whale watching. So this video is really just going to be the cherry on top of the cake on why I think we are going to be rolling over very, very soon. So let's jump right into this. To start with, I'm going to pull up the divergence cheat sheet. If you haven't seen this before, I definitely recommend to either take a screenshot of the screen or head over to AlchemyBot. It is a massive drag to try and remember every single type of divergence off by heart, and I often reference this myself. So if we do reference the hidden section and then cross-reference the bearish divergence, you will see that we're presented with this section over here on hidden bearish divergence. What is hidden bearish divergence? So you'll notice the price section and the oscillator section here. If we look at the price section for hidden bearish divergence, you will see that over on the price action, you have highs and lower highs, and then when you reference the oscillator has highs and higher highs. So once again, price is making lower highs, oscillator is making higher highs, and this is what constitutes hidden bearish divergence. Now, what would we need to do to invalidate this short-term hidden bearish divergence? And then I want to end off on one last note. So what we would technically need to do is break above where this trend started, and this would be on the 25th of June when the RSI made a top, came down, and then made a higher high. So if we look at the price structure, you can basically see this is kind of where we started the hidden bearish divergence, and then we came all the way down to here. So technically, even in the shorter term time frames, you would need to take the lid off of this high all the way up at 21,877. So not too far away. Doesn't sound impossible, right? Well, let's extrapolate the trend and see if we can take it one step further. So we line this up, once again, this is really just to draw a line of best fit. You know, we're not trying to 100% line it up, and you will notice that I have it just above the line because I'm just trying to show you where we are diverging from. So if we extrapolate the hidden bearish divergence back on the price action, and if we extrapolate the hidden bearish divergence back on the oscillator, you can actually see, once again, line of best fit, that since the 15th of June, which is round about this region and round about this region over on the RSI, the price has been making lower highs and the oscillator has been making higher highs. So once again, if we extrapolate the trend back, we have an even larger hidden bearish divergence playing out on the chart right now. Once again, you can reference this over on the divergence cheat sheet. So what would we need to do to invalidate this larger hidden bearish divergence? Well, we would need to take the top off of 23,317, and even if we did manage to do something like this and come up to, let's say, 23,000 and then head back down, you would notice that this could start playing out as something very reminiscent of another huge bear flag. For example, if we get the bottom here and delete this over at this moment in time, if I add that line back, remove this just to make it all super simple, you can see that we are in a pretty wham bear flag, or bearish pennant rather, back to the downside right now. Now, if we were to come up to a region like 23,000 or something like this, you could just see that we could be forming something like this, which would just be an elongated bear flag, or potentially, even if this plans on crabbing out for the next month or so, because we have things like CPI meetings, we've got the GDP growth report, we've got the next FOMC meeting, all coming within the next 30 days. So is crabbing to the side for the next 20 days, 30 days impossible? Absolutely not. It can definitely come into play, but I would like to highlight in its simplest form, if we do go back to the lower time frames, that we are still making lower highs and lower lows over on the micro time frames. We do have slightly more midterm bearish, hidden bearish divergence playing out if we extrapolate like this, and then even in the short term, you would still need to get above about 21,865 before you would even take the top off of this hidden bearish divergence. So that's basically all I want to say. While we have been on a slightly wild rodeo today, I mean, we're up 1.8%, so I really don't want to gas us up or anything and say we're going to the moon or anything crazy. It is quite strange though, considering the stock market is literally at the same price as it was when it previously closed, and the dollar has been on an absolute rampage today. But if you head over to the 4-hourly time frame, in the past 8 hours, this is when we've been starting to move. So the dollar's been on a massive move up to the upside, Bitcoin was getting wrecked, and in the past 8 hours, it's just taken a miniature break. I mean, this is what has allowed Bitcoin to pump like crazy. So we could very much just be solidifying this as hidden bearish divergence before we head back down. That's all I've got for you for this quick update, and as always, my friends, cowboy out. Peace.